This is episode 60 of the SteadyTrade podcast with your hosts, Tim Bowen.
Excuse my language, we try and keep it clean here, but you need to chill the fuck.
Stephen Johnson.
You look exactly the same, I look a little bit fatter.
And today's special guest host, Roland Wolf.
You know what? I need to expand my strategies.
Now, last year, Roland turned $4,000 into $500,000. He's been a guest on SteadyTrade before, and he's back for more to help Tim and Stephen get through part 10 of Tim Sykes' 14-part Trader Checklist series. Now, he'll also be back for episode 61 as well, but for now, let's just jump right in.
Welcome to the SteadyTrade podcast. We have one of our favorite guests of all time on. He was on probably about 6 to 8 months ago, and due to popular demand, he is back. Ladies and gentlemen, it's Mr. Roland Wolf. How are you doing, sir?
What's up, man? Doing good. How are you?
I was just talking to you and joking off air. You look exactly the same. I look a little bit fatter. You look a little bit the same. I look a little bit older. Your trading account has gone higher. Mine's probably about the same. But otherwise, I'm good. How are you?
Doing great, man. Doing great. Good to be back on with you guys. It's been a while. I've been a kind of in the shadows a little bit recently, so it's good to come and see you guys.
Why
just
have
work,
you been
man.
in the shadows?
Just work. Working on a DVD. It's taken up a lot of my time. Family, trying to make some more time for family this year, and yeah, just been busy.
Now you had kind of mentioned, now just kind of as a brief history, and listeners can obviously go back in the archives. We had a episode a few months ago, as Stephen mentioned, with Roland. One of the extreme outliers, turning 4,000 into, I think, over 500,000 last year. And, we talked, actually, Roland and I talked a week ago when we were originally supposed to do this episode, and he'd mentioned he'd been spending a lot of time with the family, had a new baby, and he kind of has been working on a little bit of work-life balance, and we'll probably talk about that.
Yeah.
But oddly enough, we had to reschedule that episode because Stephen was working on his work-life balance as well. The reason we had to reschedule is he was, drunkenly passed out on a beach floating down the river somewhere. But, hey, we all have our work-life balance, and that's how Stephen balances out his work life.
So, some have more life and less work, and some people have more work and less life. And Roland probably has more work and less life, and I have more life and less work. But the people who work harder, I mean, I'd be interested in Roland. Back in the day, I remember when I saw you at the Sykes conference, you were interviewed there saying that you were studying 17 hours a day.
Yeah.
Are you still doing them 17 hours or nah?
Nope. It took a toll on my body. I mean, I did that for basically a whole year straight. I mean,
wow.
Yeah, it was a long period of grinding, and there were several reasons for that. One, I love trading. I loved the process and trying to figure this game out. It's like the Matrix, and try to decode it kind of. So that mixed with the fact that I knew that that's what I had to do to get ahead. I mean, if I spend the same 1 or 2 hours everyone else is spending on it, then I'm going to probably get the same results. I knew I could probably exponentially grow my knowledge account by spending more time doing it. It's that simple, that mixed with my passion for trading, and it just was a good marriage for me. And it led me to have that motivation every day to be up early and then just do it throughout the day. But that being said, yeah, it was unhealthy.
I think, one of the reasons, in my opinion, that Roland is an extreme outlier is he had that sort of work ethic. I mean, it's pretty amazing when you think about it. And that's one of the reasons we talk about many traders, taking a little bit longer. The simple fact is, if you've got a job, you've got school, family, whatever, a lot of you can't spend that 17 hours. So if you're looking at it and saying, well, I could never do what Roland Wolf did, it's not that you can't do it. It just means you might have a slightly different timeline, because you have the inability to do that 17, 18 hours a day.
Right. And there's obviously, everyone has restrictions on their time. And for me, it wasn't always, earlier, the first 6 months or so, 8 months, I actually had a 9 to 5. So I was not able to, and I had to get creative. And, I think we spoke on the last episode, but, I would work, but every other hour of the day that I could, I'd be studying. And so you do have to get creative when you do have a 9 to 5. If you have any other sort of obligations, you have to be creative and really maximize your time when you can. Obviously, once I went full time, it took that problem away, and I was really able to devote myself. Go ahead.
Yeah, I was just thinking, I think I've asked this question before. I've got 2 questions before I forget them. But what was it that you were studying for these 17 hours? Because most people are going to be like, look, I'll watch a video lesson, I'll watch a webinar, I'll look at the recap of the stocks that day. But like, what are you actually doing for those 17 hours? Because that stuff takes a couple of hours, not 17 hours.
Yeah, I get that question a lot. So when I said 17 hours of study a day, I did not literally mean that I am just studying as if for an exam. It meant I was trading, I was going through
watching
filings,
the markets,
I was watching the markets. I was just immersed, So I mean, going through my data, going through my trade tracking, going through setups. And then, I watched all of Tim's DVDs, like literally all of them, many times, several of them. Obviously, he has thousands of videos on Profitly that I watch most of those. All the webinars and the challenge chat, I watch most of those. And so between all that information, I mean, I had a lot of time, I had a ton of info to go through. So I went through that, YouTube, finding people I liked and kind of going through YouTube videos. Some other traders who I really respect, I'd go through their, information, whatever they had out. So, I mean, obviously Tim has tons of information, so that made it easy. Outside of Tim, there's not too much, but I did try to find everything I could. So yeah, it wasn't studying 17 hours a day. It was being immersed 17 hours a day.
Yeah.
Well, and that's, I talk, one of my favorite sayings that podcast listeners have heard. I talk about just staring at charts till your eyes bleed is one of my favorite things. And a lot of that is just that seat time, sitting there watching stocks all day long, something like, we're recording this on August 27th. A stock like Cron, I was watching it this morning. I missed that initial spike because I was doing a webinar.
Right.
But you know what? If that thing starts spiking at 2 p.m., I'll be all over it. In the meantime, I'm staring at Cron for 6 hours because I'm going to be ready and I want to know what that stock does into that close. So that's exactly where, you can't just look at a daily chart or a 2-month-old 1 year, 1 day chart. You got to stare at those intraday charts as well.
Yeah, 100%. I love that saying till your eyes bleed because here's a fun fact about
your eyes started bleeding at one point.
Basically,
really?
I'm not even kidding. I think it was about a year into trading for me. I had to get glasses. Like everyone has seen me with glasses, and I thought I had 20/20 vision. I didn't have to get glasses till I started trading. And what happened was I was trading so much at the end of the day, I would go home and my wife was like, "What's wrong with you?" Because my eyes would be bloodshot red. And they hurt, they were fatigued and they hurt.
See, I just thought you had them. You're so damn handsome in those glasses. I thought it was just a fashion statement. I didn't realize that.
No, it was because my eyes are not perfect. And I spent so much time looking at numbers and scans and charts that my eyes were fatiguing from the tiny bit of focus that I didn't have. So that the doctor gave me glasses that took care of that. But I didn't, literally they were bloodshot at the end of the day for several months. And finally I went to the eye doctor. I'm like, yeah, look, I look at a screen all day. What's going on? But it's true though. It's true what you say. And it's pretty boring now. Trading, initially was really exciting to me. And you get that adrenaline rush first thing in the morning. Well, for me, it's not like that anymore. I'm just super bored all the time. It really is. I feel if you're trading properly, you should be bored.
Exactly. Yep.
You shouldn't be all over the place trading everything that moves and
yeah. If I talk about that all the time. If your heart is beating through your neck and you're yelling and screaming, man, you excuse my language. We try and keep it clean here, but you need to chill the fuck out and have a plan. Wait for your setup. But yeah, if you're freaking out, man, you need more seat time or you're doing the wrong stuff. Yeah.
Yeah, absolutely.
Yeah, and it's funny though, because it's almost like a lot of people get into trading for the wrong reasons, because for the last 18 months of even just until a couple of months ago, I was just in it for the thrill. I was like, I'll just take this position size and I'll go big and maybe I'm going to win and maybe I'm not. But overall, I'm kind of making money. But every now and then something bad would happen unexpectedly and you'd lose $3,000.
Right.
And then you get to the point now where you're like, I just don't want to lose that money anymore. So for me, I've got to a point where I'll never take size unless I'm like really sure of the outcome, or it's like one of those golden opportunities, which comes 4 times a month, 5 times a month, and everything else is just passing time.
Yeah, 100%. I agree. I don't wake up in the morning anymore thinking like I have to make a shit ton of money today. I mean, early on that was kind of the case. But I didn't have much money early on. So, I understand when you're coming in with a small account, like you have that sense of urgency to grow it. But there's no shortcuts, there's no shortcuts, and people are always looking for that one trade that's going to put them over the edge. And it's just not, it's really not. It's a matter of a bunch of trades, hundreds, thousands of trades over time and consistency over time. If you have the right risk management and the right risk reward ratios, then over time it's supposed to grow. It's not so much like a one hitter quitter kind of deal, like you're rich, so.
Yeah,
Which took me a long time to understand that.
I don't know if Sykes took this from someone or if he coined it, but he says that all the time. It's like no one trade is going to make all the difference in your account on the plus side, but you can blow up your account with one trade. And if you've got that gambler mentality, that we all call it degenerate mentality, then you could blow up your account in one trade. You might get lucky here and there, but that it's not, consistent success over time isn't about today's trade, tomorrow's trade. It's about it's about 28 trades over a month or 150 trades over a year.
Yeah, and there's that FOMO that comes into play, especially when you're new, and it still happens to me once in a while. You'll see that AWX unicorn that just goes nuts, and you weren't part of it. I had no part of AWX because it was the 4th or 5th green day. That's not my play. But then I watched it after hours go to $30 or whatever, $35, and I, it still hits me. But for the most part, the FOMO thing's under control because I understand. There's always going to be another play.
I think that's a very valid point that new traders should listen to right there is, when you're new, you get that FOMO because you're like, holy crap, this is going to be the only one. It takes experience. It takes time. But listen, Roland, I mean, you only get a couple AWXs a year or maybe one a year, but there's a lot of great trades and you don't have to freak out and get that FOMO, but it takes time.
It does take time. I mean, it took me a long time. It took me even through this year, and I had been doing great last year, but I would still have that FOMO all the time. Now, not so much. And what I like to do is work with mantras. They kind of help me. If there's one particular thing I'm struggling on, I have to figure out a way to bring that to my conscious. A lot of stuff's subconscious, and we're creatures of habit. You do the same things over and over again. But for me, it's kind of like I figured a way to use mantras and sticky notes and kind of get over any sort of psychological issue I have or emotional, whatever it is. Sorry, 1 second. My lights turn off automatically.
Steven, perhaps you should try some sticky notes.
I don't have sticky notes, but I'm curious to know what your mantra is. Is it like, I am the wolf, I am the best? Do you just like say it, just I am the wolf, I am the wolf, I am faster, I am stronger, I am the wolf?
No, it depends. It depends. I mean, I've had several, I've had, just like anyone, I've had, many issues that kind of I find are the most important to get rid of. Chasing, chasing something most people who are new are going to end up doing no matter what. You see things, you chase it. FOMO comes and you chase it. For me, it was as simple as running on a sticky note, don't chase, in bold, putting it on the front of my seriously, because that will at least make you think about, am I chasing in the first place? With the FOMO thing for me, it ended up being on to the next. And I put on to the next on a sticky note, put it on front of my computer, and that's been my mantra for this whole year, basically. And it's been super helpful. Like, if I miss something, okay, on to the next. I have a great trade, okay, on to the next. I have a terrible loss, okay, on to the next. And it's, of course, you got to look back. You got to look at your data and your statistics and then refine things. But at least it keeps me moving forward. as opposed to like just dwelling on a bad loss. And now I'm not going to trade for a month because I took a loss or whatever it is. It's really been helpful for me, win or lose, to keep it in perspective, like on to the next trade. Where's the next trade? And that's kind of how I go about everything now,
Yeah, I mean, I remember when I was in Italy with you, one of the best things you ever said to me was, especially about chasing, you're like, why would you be chasing? Because that's when everyone's in it. You want to, and 95% of traders lose, so you want to be doing the opposite of what everyone was saying. That was one of the golden things that I've kind of remembered for a long time since. But like, it makes us wonder, what's the main type of way that you're trading now? Are you still kind of dip buying? Are you dip buying strong stocks? Are you buying more strength these days? Or what's your patterns? Tell us the secrets.
So the truth is, the last couple of months I haven't been trading as much, and partially this whole year even the markets have been much slower. Small cap. We had in January, we had kind of the end of the Bitcoin momentum, all the blockchain stocks. So I had a really large gain on Kodak to start the year off, which was nice. But come February, I had my child, so didn't trade much in February. But I was opening my scans every morning, checking out what was going on. And a lot of the time I just turned my computer off. I didn't see anything that I really liked. So I'm adjusting to the market. I'm sure a lot of people have had some issues, especially long, for the last couple months. It's been slow. So I have had to find, some other patterns that I've used in the past to grind out, a living every day. One being kind of bottom bouncers. We've seen a lot of them lately, like just literally stocks hitting 52-week lows and bouncing. You get a day one bounce and it's been 50, 75% gain sometimes. But it's not the safest play for me. I hate, dumpster diving for bargains, that kind of thing. But it's something that I had used successfully in the past. So at least in this climate, I'm able to still find some plays. But we haven't seen any real massive morning spikes lately. For the most part, at least stocks under $10,
Yeah, so, I mean, I look back at, not necessarily the whole year, but probably the last 3 or 4 months. And man, if I had to pick just guessing, the average price of the stock I've traded, it's probably $12, $15. I mean, the low price momentum just hasn't been there. I mean, I'm thinking, I was in a $40 stock last week, which in 2016, 2017, I don't know if I ever touched a $40 stock.
So. Right. Yeah. And that's the thing I noticed as well. That's been kind of the range, is like the $10 to $20 stocks have been kind of good swings. There've been like Turtle Beach here. Several of those have been good plays, and I just have trouble kind of getting up there. It's not in my sweet spot. I'm not really so comfortable there, which is something I need to work on. But yeah, I'm, what I'm trying to do is be super patient until the market's ready again. When we get some of these low floats running and we get some continued momentum or some good sector momentum, which wheat stocks have been running recently. I took CVSI last week. I bought the panic, and that's one of my absolute favorite plays. So, the important thing to me in markets like this is not to just give money away for no reason. I'm not just trading anything for no reason, even if it means I'm not trading for 2 or 3 days, which has happened. I think the longest I've gone this year, about a week in terms of actually trading and not taking a trade. So for me, it's about protecting my capital when the markets are not ripe for what I like to do. There are people who do well that, if you're a short seller, it's been pretty friendly for the last couple months. So for me, it's about protecting myself when the markets aren't there for me. And that took me a long time to be able to actually sit back and not trade. Especially when you're watching,
I think a lot of new traders discount that. And again, obviously that's the majority of our listeners is, you don't realize, first of all, how quickly you can grow your account with small gains, but obviously the inverse is true. And if you're just trading crap, especially August has been lame for low price. If you're just trading crap and it's $100, $100, it doesn't take long. And all of a sudden you're down $2,000 on a, $10,000 account or something, $100 at a time. So.
Yeah, it's true. And if you have a smaller account, things like commissions just on, dumb trades are going to add up. And it's, that time for me, if I had a small account right now, this time would be spent, exploring and studying and trying to really figure out what I'm doing as opposed to just trading. It's just too easy to let a small account bleed out that way. So.
Yeah, I mean, I'd also be interested. I mean, how have you found the weed sector? I mean, Tim Bowen, I've hit him every day in StocksToTrade Pro, going on and on about it's coming, and then it's here.
Yeah, I've been saying that for 10 months though, so don't give me too much credit.
No, it's been weed sector's been running, and it actually has sustained. It's been sustaining itself for a little bit. I'm waiting for kind of a pullback. I just want to see it really confirm that we get the volume and. I'm just not 100% convinced yet. I'm not going to be taking.
I joked about calling it since last fall. We had that little mini weed stock run last fall, and for real, for 10 months, I'm like, it's coming, and I've been saying it for freaking 10 months. So as much as I love the action last week, I'm with you. I'm not convinced yet because we've been faked out like 4 times in the last 10 months.
Right. And the last thing you want to be doing is buying the top of like OTC weed stocks, when they panic. I mean, you saw what happened to CVSI last week. It was murder.
Yep.
It was a murder. I haven't seen an OTC drop like that.
From 9 to 3, like 950 to 350 in like 10 minutes. Yeah.
Right. It was wild. I mean, it was a great dip buy. It was a great reshort, and it's been very volatile and awesome. You could have dipped bought CVSI every day last week. I only caught one of them, so that's fine with me. Once we get into a second morning panic and third morning panic, I get scared to dip by, the second or third morning panic. I'm always there for the first one. So, but weed sector, I'm going to let it do its thing. I'm not really going to get aggressive on it until I see something I really like.
Well, and typically, the calendar. I mean, things typically pick up after Labor Day. Everybody's back from vacation and stuff like that. So
yeah. So for me, it's a capital. I'm just protecting capital until the time is right. I still take. When I see the trades, I'm still taking the trades. I've just been trading way smaller, and I've been much quicker to take profits as well.
Yeah, and I mean, have you not thought about jumping over to the dark side, jumping over to the short side? Because I mean, yeah, you've experimented with it and you've done it well.
I'm locked and loaded. I've been doing some tracking and stuff like that, and I know the setups when it comes to the short side. Part of the reason I haven't is because I've been working on this DVD, and it's mainly long biased. It's mainly, a lot of it is for maybe newer traders who are trying to just get consistently profitable with their longs. Obviously, if you have a smaller account, it can be difficult to find locates. And then once it does come time to short a stock, hopefully, if you're doing it right, it's up quite a bit. So you're only going to be able to get a few shares, So for me, this process, I've been trying to keep myself not in a small account mentality, but kind of like I want it to be very applicable for your everyday Joe with like 5K in their account. So yeah, I mean, I am ready to go. It's just a matter of when I'm ready. I'm not 100% ready. I want to get done with this DVD basically, and then we'll get going on the short side.
But I'd be interested to know a little bit more about your DVD. It's not something I've seen yet. I'm not sure.
Just real quick, actually, Steven's got a DVD on short selling too. It's like 5 seconds long. Basically, it's
like don't short
find the top percent gainer of the day and short it at 9:15 a.m. And that's the end.
And if it goes higher, just average up and average up and average up.
Yeah,
and but 9 times out of 10 it'll work. One time out of 10 it doesn't, and it's fucking catastrophic.
Yep.
But all of the other times it works perfectly. But
for me, okay, I've spoken to a lot of people about long and short, and people want to know why I go long, and it's just because I got comfortable there. I really got comfortable. I found a little niche that I liked and that I was able to kind of exploit, at least for the time being. This year has made me at times think about, well, I need to expand my strategies. Like if I go a week without trading, even though I'm watching, then, maybe there wasn't anything to trade, but maybe there's another strategy that I should be using in this market environment. So it's, I have thought about it, but in terms of long versus short, especially for newer accounts, here's my take. I think the best short setups are the highest odds setups. Okay. I think they are the highest odds setups, but they can also be the most dangerous setups. So for, a new trader coming in, trying to trade, trying to short a parabolic or something at multi-day resistance or whatever they're using. If you don't have the discipline to cut, you're screwed. I know several people personally who blew not tiny accounts up, but decent sized accounts on AWX. Because you get into that mind frame. Well, okay, you're down. It's up $2 a share from your entry. Well, you got to hold it and just wait till it comes back down. That kind of thing. Well, it's not necessarily the case, And
but everyone does that as well, though. Even the best do that. Like you've seen Tim Grattani's DVD. You've seen he shows you through 4 patterns in his DVD, and the first one is just shorten stocks that spike, shorten stocks that go parabolic, and he's like, I can't do this anymore because I physically just don't have the discipline to cut it. And I need a resistance level to get out on. And,
right, which he says, he's not like, just short it and then let it go. He understood.
It's so easy.
He understood that he had an issue with it, and then kind of pulled back from that strategy because no trader wants to be down a couple bucks a share. Like where if you're short, have it up on you a couple bucks a share in the span of a minute or two. It's happened to me. And that's just the worst position to be in, because then you're trying to scramble to figure out a new way to either get out or stay in. And, for me, it really, you got to stick to your plan,
and that's ultimately, there's this, and we talk about it a lot, and I pick on Steven, there's this double-edged sword of these crazy junk stocks. We all love them as shorts, but the biggest, because I'm doing air quotes, they all fail. 99 out of 100 of them fail. But the problem is, if you're new and you can't stick to that plan and you can't stick to your discipline, by the time that thing pulls back, you're done. It doesn't matter that a week later pulls back.
Right.
And that's kind of that I think a lot of new traders get enamored by that because they'll see guys, or they'll even look at past charts and they'll be like, look at this thing. It went straight up and straight down.
They always come back down.
Yeah, but it doesn't matter if you're dead and buried by the time it comes back down. That's the problem. Yeah.
Someone else is making money from that, and you're not one of them. So it's, it is. And I had that. I understand that. Like they will come back down for the most of the time. Look at Turtle Beach. It's still up. Where is it? The 30s now. But it's not coming back down anytime soon. It looks like. And that's one of those charts that people were just shorting and covering, and it's not kind of come back down. So for now at least.
And I know I'm going to start. Go on. I'll let you go ahead.
Yeah, and so for me, I don't want to be sitting, holding, waiting. Never. And particularly if you have a smaller account, that is the worst place to be, is in bag holding of any sort. That capital should be elsewhere. That capital is what you need to trade with. So if you have capital tied, say 50% of your account or more tied up in a stock, that's literally you're just sitting waiting for news or PR. You're, dead in the water. So, that's what I try to avoid at all costs. And I think everyone should.
Yeah. And I think let's get on to Trader Checklist, Roland. I want to ask you a couple of questions about your DVD because I'm intrigued, but we'll save it till the end.
Yeah.
Let's jump into Trader Checklist and let's compete like it's England versus America. Yippee-ki-yay.
I want to talk right now about TSRI because this was the play. I was buying this pre-market because this was an earnings winner. So let me go over it for a second. So the real resistance is right here. You're just looking at previous highs. So the resistance here is at 550. And, this is a crazy volatile stock. Even at 512, it's up 34% on the day. But pre-market, it was trading up here, between 6 and the low was like 550, and then 6 and then 550. And I was buying it in here in the 550s because I thought that it could retouch 6, and if it could retouch 6, it could break out. Here was my trade, and I ended up losing on it just a little bit, but still wrong. Right overall in the sense that it would morning spike, wrong in my trade. And so I said I bought this low float, low market cap earnings winner that's a multi-year breakout. Oh, they reported earnings last night too, I should mention. in the mid-5s. It hit 6 earlier today, so I'm buying it solidly off its pre-market high. Still up 45% pre-market, though, already. So I'm only taking a small position as it's a risk. I very well might be chasing, but similar low floater TCCO spiked to the 7s all in the first 5 minutes of trading. So this could happen here, hence why I'm risking it and buying it pre-market. So normally I do not buy pre-market. There was not a lot of volume, but it had the multi-year breakout. It had earnings. It has the low float. Let me just do a quick analysis. Let's get to TSRI when I was buying it this morning, because this is a new trade. This was my only new trade that I've done today. Pattern and price, you've got multi-year breakout. I'm not chasing it at 6, which it had already hit. I'm buying it on a dip off its high, so that reduces my risk a little. And it's, low flow, low market cap, which is the creme de la creme of patterns right now, where you can get this $2 a share spiking.
So for me, there's several things. This is a stock that I don't distinctly remember TSRI, but I'm going off of what Sykes said, and sounds like a bread and butter play for me. He said it's a low float. He said it had earnings, and it's a multi-year high. I love breakouts on earnings, especially when they're low float. So for me, I shudder to give the perfect score. So I would give this myself an 18. I mean, based on what Sykes said, this is about as close to a 20 as I can get.
Roland, what would you give it? I'll save the best till last, since I'm the best at longs. Yeah.
Yeah, it's up there. It's 52-week breakouts. They're not something I play too often, but part of the reason for that is we don't get too many down in Pennyland. We're usually seeing stocks hitting 52-week lows. So the truth is 52-week high breakouts, I haven't played too many of them because we just don't get too many of them. That being said, I do like it. And the price is okay. Yeah, I mean, for me, it would be like a 15, something like that. It's something I would definitely play. I do play 52-week breakouts. I do like it. And the low float as well. But yeah, I would take caution. I've seen a lot of them, especially with the penny stocks, fail, or just pull and spook everyone out. So yeah, it's I'd say 15 for me.
Yeah, and I'll not add much more. I'd give it about a 17. But the reason I'd give it a 17 is because when you get one of these like kind of clean charts where most stock charts are going down like this, right? So every now and then when you see a stock that it's traditionally going like this and then all of a sudden it's popping up, it's a very clean chart. There's nothing overhead. It's kind of a dream for anyone going long for me. These are always the ones that run. So I'd give it about a 17. Clean charts are underestimated. People don't give clean charts enough credit.
Well,
Roland,
I think we just don't get many clean charts. I mean, we just really don't. If you're trading stocks under $10, we're getting, and they're
hence the reason I love, plus $10 stocks too.
Right. No, 100%. And it's something that I need to get better at is trading stocks over $10. I'm really comfortable where I am. But for this, for the purposes of this, I mean, we just don't get many 52-week breakouts. And earnings is obviously a catalyst I love when earnings are moving stocks, penny stocks, that is.
So on a pattern price, I mean, this is a 20 out of 20. Risk reward, this is where it wasn't perfect. It already was up 45%. A lot of these times, as you saw actually, as what happened with TSRI, but you don't know what's going to happen until afterwards. But what happens sometimes is you have a dip before a spike, and that's exactly what happened here. And you don't know how big the dip is going to be, so all you can do is cut losses quickly, which is what I did. I was buying it in the 550s, selling in the 520s, and I lost like 20, 30 cents a share. And that was, I thought that was pretty good because, it was scary. You don't know if you're going to lose 30 cents or you don't know if you're going to lose $1 because the spread is like 20, 30 cents. It's not as liquid as I like. So the risk reward.
For me, risk reward is a difficult one because we're looking, it's a 1 million float. It's traded a couple of million pre-market. This is generally an indicator when it's rotated, it's float twice over and it's on earnings. It's going to be a pattern that's going to run. So that's why I guess the pattern's been scored so highly. But I'm always scared about. I mean, I can short pre-market all day, but I really struggle going long, especially if there's not like it looks a bit choppy. There's no kind of clear direction there. I'm not sure where it's going, and it's pre-market. So I mean, I'd give it about a 5 because I'd be scared with it. It's just I'm just going to buy it and it's going to drop. So I'd give it half marks. I'd give it 10. It's 10 out of 20. Yeah. Roland, well, what about you?
I'm actually just kind of looking at the daily chart from back then. Yeah, it's kind of a tough call for me. If this were something I was playing, where's the 52-week breakout? Do we know?
I think was it 550? Was it at the time?
I think I remember him saying that. That sounds right.
Yeah, I think 550 was. So.
And where was he buying it? Sorry.
Like pretty much I think, just before the open. He's getting in at about 510. I think he was saying.
Okay. Yeah, I mean, for me. It's kind of a tough call doing this in retrospect like this, isn't it?
That's why we pay you the big bucks, man.
Yeah, right. Was he buying it after he sold it, the pre-market, or he sold it right when the market opened, I'm guessing, on this dip? Is that what he's saying?
Yeah, I think he bought it around 510 pre, and then he obviously he sold it when it started to fill at the open, I think.
Okay. Yeah, it's so tough for me. For me, it would have to be like this pre-market low, like going into pre-market. The second it kind of dipped on me, without real knowledge of what was happening prior to this, that would be it. I would just cut a trade like this immediately, pretty much, if it went against me. But risk reward buying it there, I mean, if it depends on where your risk, like if you're cutting it at $5, you have 10 cents risk. That's fine. It's, that's your personal risk, and that's okay to me. So it's kind of a tough call with risk reward. I don't see any great levels, like obviously that you're able to risk off of and be comfortable. For me, it would be probably a 12, something 10. I'd probably give it a 12, as long as you're being safe, which he always is. 12, 13.
So I'm going to do kind of two situations. I'm going to set the risk to reward on StocksTrade, and then I would set the risk to reward on how I would trade this thing. So for me, I mean, hey, I know I love Timmy. We're friends. We work together, obviously. But, for me, the risk to reward on buying this sketchy low float stock in pre-market sucks. I would not buy this thing in pre-market. I can't remember the last time I bought a low float stock in pre-market. So no offense, Timmy, but risk to reward in pre-market on this thing, I give it about a 5 at best. Now, what I would do, and we talked about this earlier, and Roland mentioned it too, I freaking love those 9:45, 10 a.m. high-a-day breaks. For me, in pre-market, and Steven knows this from watching enough STT Pro sessions, I'd be just saying, let this thing shake out at the open. If it breaks the high of the day, that's your buy. If it fails on VWAP, that's your stop. Now, it wouldn't have been an amazing trade, but I think that high-a-day break on a high-volume, low-float stock with earnings at or around a 52-week high is a pretty good risk to reward. So that 9:45 entry, I give maybe a 15. But for the pre-market buy, yuck.
Yeah, I don't trade pre-market anymore. I don't trade pre-market anymore. I just don't. I let things shake out, like you said. It's not liquid enough. Sometimes when you get the liquidity pre-market, it's okay. But for me, it's not going to work for me. I don't, it's kind of a 50-50 thing. I hate chasing, especially pre-market. So yeah, it is a tough call. And that's why it's tough buying pre-market and then having good risk reward. Because all the volume that occurred pre-market, usually it's low. And so it's not really setting a level. And that's why I take all pre-market levels with a grain of salt and sometimes don't even care.
Unless there's just insane volume.
Exactly.
Nice analysis. Next clip. Okay.
So the risk reward really wasn't that great. I'll give it a 7 because I did buy it on the dip, but it's still scary. Ease of entry and exit.
Ooh! By Price is Right rules, it's closest without going over, right?
Right.
And I had a 5. I was the closest without going over, right?
And you win a new minivan.
You win a new Timbo and the outside fixer-upper of things. We're all booked out for 6 months for manual labor van.
Another tough call because without seeing price action, it's kind of tough. At low float, ease of entry exit is not great usually. It depends on the volume that it's trading. Obviously, if it's trading great volume, then that's fine. But low floats are not easy to enter and exit exactly where you want every time for the most part. Damn, man, this is a tough game. This is tough.
I like that you're taking it so seriously, though.
I'm just trying to.
He's not just like
he's
throwing numbers out. It's like
he's like loaded the charts up.
Yeah.
He's like,
actually, I'm just
looking for videos of the trade.
I don't even remember what we're talking about. I just pick numbers randomly out of the air.
Well, it's like I've got to get the right one.
I don't know. That's really
no
tough.
wonder you're making money. No wonder you're making money if you take trading this seriously. If you're taking this seriously, I'm normally drunk when I'm trading.
I'm butthurt about the 12 I gave for risk reward already. So
normally I'm drunk and I don't know what I'm doing when I'm trading. Jesus.
Yeah, I mean, it's so hard to give an answer. 4? I don't know. If it's a low float, depends, and the spread gets wacky. 3? Who knows? So we're going to stick with a 3 final answer.
Yeah, I'm just going to give it 3 as well because there's 3 people here. Well, there's 4 with the producer, but we can't see him. No, I'd give it 3 because low floats, high volume near the open. They could just do whatever the effing hell they want. And it's hard to get out. And sometimes if you don't have good discipline, you can get trapped in a sinking ship. So I'll give it 3.
So I'm going to go with one thing I did key on. Sykes had mentioned the wide spread, which we all hate. So again, we're trying to reverse engineer this. So based on the fact that he said it's a wide spread, I'm going to give it a very low rating. And back to the Price is Right method, just like when you think everybody is overbid, you bid $1 just to be a smart ass. So I'm going to go with a 1 just to see if I can win with the Price is Right closest without going over.
Ease of entry and exit, I mean, I'll give this a 3 out of 10 because it's scary. Past performance, history of spiking.
So, past performance and history of spiking. I cheated a little bit while we were in the interlude. Roland had mentioned that this stock has a history of spiking, but spiking and failing. Again, we're kind of doing this in retrospect. I can only guess. But if Roland says this chart looks like crap, I say it looks like crap. So I'll give this I'll go with a 3 just because of the fact that Roland didn't seem to be too spectacularly wowed by this chart.
Yeah, you're going to go for a 3. I mean, from what I could see on the yearly chart, I mean, it is a multi-year high, it's a 52-week breakout, which is good. But if it's got a history of not being able to put 2 days together, 3-day runs together, it's got a history of not being able to hold its highs. I mean, it's past before. You've got to say it's really, if it can't put multi-day runs in, you've got to give it like a 6 or a 7 or a 5. It's a 52-week high though. I'd give it an 8. I'm going to give it an 8. I'm not being swayed by you. Rolando,
that's bold.
Rolando, do you know? And not to distract you when you're taking this so seriously, but do you know in Dubai there's a place called Rolando's Pizza, and I always think of you when I'm eating the dough and the pizza and the cheese.
I'm sure you do. That's very flattering. Yeah. So we'll get to my rating. Prior to, it looks like very illiquid. So there's not too much on the chart that you can use for levels of support and resistance and just information in general. So for me, that coupled with that, it doesn't hold spikes. And I'm looking at a lot of history afterwards. This was quite a while ago, but yeah, I'd give it a 2 basically.
Shit. Haven't been that amazed.
Underbid me.
Haven't been that surprised since I watched Mrs. Doubtfire. It's a good movie. Robin Williams sadly passed away. Let's play the next clip and see what the results are.
Past performance, history of spiking, not so much. It has a little, but I'll give it a 5 out of 10. At what time is it personal schedule? You're aiming for, the morning spike. I actually bought it pre-market in case there was a spike right at the open.
So what I'm going to do here is again, I'll rate this based on Sykes' particular trade. And I think you probably know what I'm going to say. Buying a sketchy low floating pre-market, yuck, yuck, yuck. So, and for me to rate that trade, pre-market trade, 1 out of 20, I'll give it a 5, simply because it's a 1 out of 20 on the Sykes sliding scale.
Yeah, I mean, for me, at what time of day it is, I mean, I love buying stocks pre-market. I really love doing it. So what time of day is it for me and my style of trading? I'd give it an 18. But on the fact that every time I buy a long pre-market, I lose, I'd have to knock that down a few points because I never win trading longs pre-market. So I'd probably have to take about 14 points off it and give it a 4. If we're talking profitable trading, if we're talking about being a profitable trader, then
ultimately it's like what you're interpreting this trade through your lens, through your drunken beer goggles. So
I mean, generally I'd give it a 4 if I'm being honest. But if I've come from a Barasti beach party and I'm drunk, I'd give it about an 11. So take your pick. We'll go in the middle and we'll say 7 or 8.
Yeah, for me, it's I don't trade pre-market anymore, and particularly right before the market opens. If I'm trading pre-market, it'll be because I saw some news and I was in very early with small size or something like that. So yeah, for me, if I have waited all the way till a minute before pre-market or whatever, well, I'm going to wait, until it actually does its thing,
opens.
Wait for the volume to come in. So for me, it's probably a 3.
Yeah, great tip there for the listeners. I mean, it's one thing if you're the first to spot the news at like 7 a.m., 8 a.m. We love that. We call it the 8 a.m. shakeout. You get a lot of news, a lot of stuff comes out. But Roland makes a great point. If you've been watching this thing for an hour and a half, don't press that button at 3 minutes to the open. It'd be different if you saw the press release at 8:01 a.m. That's a completely different situation.
Yeah, and I don't know, I've made this analogy before, but I know, Tim, you didn't play poker. Roland, do you play poker ever? Or have you played poker?
Yeah, I've played in the past, yeah.
So I've made this analogy before. Why would you take a trade at 9:29, 9:28 pre-market and jump into a stock when you could probably wait till, like, say, 9:33 and 34, 35? And it's the same thing in poker. It's like, why would you play when you're left of the dealer or when you're right next to the dealer and everyone else has got to act? Would you not rather wait for people to react first? See what they've done, have more information, and then trade. Do you know what I mean? It's like a good analogy. You could put it in your DVD and just put me as credit somewhere.
No, it comes down to volume. It really comes down to volume because when the volume comes in, that will tell you the truth of what's about to happen. For the most part, that's what confirms anything. Anything on low volume to me is not anything important.
Yeah. So true. That's such a good piece of advice, actually. If you wait for the opening minute of the day, if it trades 200,000, it means that not many people are really interested in buying it. So the news isn't actually that fundamentally going to change the company. But if it trades 3 million and it's a low float, some big shit's gone down with the company. I know that because I've had my face ripped off short.
Yeah, it's you got to see what's going to actually happen, and the volume is what is going to confirm that. So, especially if you're long and you want to take size and there's not good volume, or short, if you're a good short seller, you're not just shorting a liquid crap. You know what I mean?
Yeah.
You're not able to take size because you're not able to get in and out. Last thing you want to do is go load up pre-market and then no volume comes and you're left holding a stock where if you want to sell all your shares, you either have to piecemeal them out so that you don't tank the stock yourself, or you have to tank the stock yourself. It's one of those things. It's not acceptable to me to be in that position.
Have you done any more propping bids? Do you remember you said you propped a stock once with loads of shares and you got took out? You've still not repeated that mistake.
I haven't done that. No, and I learned a lesson. It's one of those things where it's not a position I want to be in again, so I'm not going to do it again. What does that do? That means that I'm in a trade that's not working for myself, and I am trying to fix it by being an idiot. So yeah, it's I don't do that anymore. No, if I'm in the position where I need to try to prop a stock up, then I should be selling. That's how I feel.
Definitely. Okay, cool. Next clip.
I actually bought it pre-market in case there was a spike right at the open. So I'll give this an 18. Normally, I don't like buying it pre-market, so that's why I have to ding it a few points. Actually, we'll change it to a 17. Reason Catalyst earnings.
When it comes to the catalyst, I don't recall what it was, but he did mention earnings, and it is low float. So to me, that's enough. You know, I frequently quote Full Metal Jacket, one of my favorite movies. And in the beginning, the drill sergeant says, you know, this guy is dumb, but he's got guts, and guts is enough. And to me, with low float and earnings, earnings is enough. So to me, a low float stock with earnings, I'll give it a 9.
Yeah, I can just, same thing, low float earnings. I'll just give it a 9. And the market environment, if I remember, I've watched the DVD and I've seen how he was trading that time.
And it was summer 2016, which was a hot time for low float stocks.
Low float was running. So I'll give a 9 and a 9, which makes 99. Not really, it makes 18. But Roland, what do you think?
Yeah, for me, like reason, catalyst, and market environment most times go hand in hand. So like our earnings winners actually making stocks move at that time. Sometimes we'll see good, what you think are good earnings, but they're just not running. So, you know, if in fact the low floats were running at that time and earnings were moving it, then earnings is one of my favorite catalysts, you know? So yeah, I'd give it probably like an 8. If the market environment was right for that at the time, which I don't recall. So I'd say an 8, and market environment, I don't remember, but if they were running, I'd give it an 8 as well.
Cool.
17. Reason Catalyst earnings, you know, right now earnings aren't getting rewarded that great, but for me it's a decent pattern, so I give it a 7. Market environment, again, for earnings, it's a 7. So it's a 66, not quite up to standards, but at the same time, you know, what's the risk? You have to think in terms of, okay, can it really spike? And if you're right, if I was right, you know, I can make $1. I might make $2 a share if it really spikes like TCCO did. And if it doesn't, if I stick to my rules and I cut losses quickly, you know, I lose 20, 30, 40 cents, which is what I did.
Five, 4, 3. So I came up with a 50, which, you know, the biggest knock for me, the biggest variance in Sykes and me was that time of the day. You know, I say, and I know I've kind of repeated it a few times, but if you're a new trader, which you probably are if you're listening to the podcast, please just do your best to avoid pre-market. And when I graded this particular trade, I mean, I gave it, I think, I'm trying to, if they're in order, I think I gave it like a 3 on time of day, and Sykes gave it a 17. So hence the reason him and I are 16 points apart. The biggest delineation was that time of day. You can wait on these, especially these low floaters, especially when low floaters are hot. You can wait for that 9:45, 10 a.m. window. Or what I love, especially if you're that part-timer or that new trader, wait for that late day spike. I mean, let it just chop around all day. And if you get those high day breaks, those high volume moves late day, there's so much more potential for those moves to continue and not shake you out, just like Sykes got shook out on this.
Yeah, I mean, for me, I've got a 57. And again, for time of day, I would never like the idea of going long pre-market when it's just about to open and it's a low float and it can dump like 20, 30, 40, 50 cents on you without you having much control or being able to get out, and then you've got slippage. I'm so bad at longs that I'd need to see on the history of the chart that it can spike multiple days. So at least I'm going to take a profit on day one and ideally swing it on day 2. So yeah, that's probably why I'm a little bit lower.
I'm not sure what my number is. I haven't been keeping track, but I know I went in and taken the trade there, like personally. It's not something that I would have done. Yeah, and it's, you know, all this is in retrospect, obviously, so it's a difficult game to, you know, if you're not watching the price action and you're not watching the level 2, it's hard to say exactly what happened there. But for me, yeah, it's not a setup I would generally take at that point. You know, going through the daily chart, I don't remember this chart at all or what the earnings were, but earnings as well with low floats can be sketchy because there are going to be people who just see the earnings. Maybe one of the numbers is good or something, and they're just buying it. And when you have a low float like this, obviously a small amount of buys can move a stock quite a bit, especially pre-market. So that's why I'd be so careful pre-market with any low floats that are moving on any sort of catalyst. You know, you still have to be careful, especially pre-market. So yeah, it's not, I think when it comes to the sliding scale, as long as you have that kind of process, you know, if you have no process whatsoever, you're not, you know, you don't weight anything and you're just seeing a stock that's up and you're buying it, then that's a recipe for, you know, losing over time. But, you know, for me, I have a similar kind of checklist that I go through in my head for the most part. And I'm able to kind of weight them, you know, because everything does change and you have to adapt. Sometimes earning winners don't move stocks. And if their earnings winners aren't moving stocks, then I'm not really that hyped on them. And then that catalyst actually will be weighted less than it would be if earnings were moving stocks. So, you know, same with the float size. Even there are times where I'll be more aggressive with low floats and times where I won't be. Time of day, I don't trade pre-market anymore, you know, unless there's a very special circumstance. So I think the thing you need to take away is that you do need a process. You need a process for choosing what you're going to play and then how to go about taking a position or not taking a position.
Yeah, I think one of the biggest values of the Psych sliding scale and trader checklist is, number one, it's free. Okay, you can go to YouTube, you can go to traderchecklist.com and it's free. You know, I greatly respect what Tim has done with it. Is it perfect? Probably not. But the biggest takeaway is have that process. I mean, he's got his prepare criteria. You know, there's 16,000 publicly traded stocks. You can't track them all. You can't trade them all. You need some sort of process. Start with this, refine it. I've done it. You know, I've got my own mental worksheets. I've got hard copy worksheets. So does Roland. Steven, you know, just does a shot and hits the short button. But, you know, the rest of us have a process that we refine and we work on over time. And that's the biggest lesson from Trader Checklist.
Right. And where, you know, and if you're doing it right, you don't have one set process that, you know, and it's not changeable because, you know, things do change in the markets and your personal process has to change with it. So for me, yeah, and like I said, if it's a momentum play and you're trying to get momentum and the time is right for that, it can be a little bit different. You know, there are times where something will hit my skin and I'll be more likely to play it than times where I won't be. So it's, you know, and that is part of the process. And part of the process for me is what are the markets doing? What's been running, what hasn't. So like, that's one of the first things that what I am trying to understand is what the markets are doing. And once I have a grip on that, then I can kind of get into everything else. You know, the macro is so important. People don't even think about it. They're just trying to find something that's running every day and play it. But if you don't understand, well, yeah, at times a certain catalyst a stock will go parabolic. At other times it'll just shit the bed. So it's like, you know, it's definitely, you have to refine it and keep doing that and keep adapting and keep changing your requirements for trades.
It's so crazy, and Tim Bono like this analogy, but like it's like with weights. If you try and do the same exercise over and over, your muscles are going to adapt to it and get intelligent, and it's not going to work, and you need to change. And this is the worst analogy ever. Actually,
it's called muscle confusion. Is the theory?
I should not be making this. I should not be making this analogy. It doesn't work whatsoever. But
I see what you're saying.
But what's important is like, yeah,
Arnold was a big proponent of muscle confusion, but anyway.
But like, people don't look at the macro perspective. They just trade their one setup and think, oh, it's working really well. And then they're like, whoa, it's not working anymore. What am I going to do? I better just add more size to it.
Yeah.
But I mean, what are the macro elements that you're looking for example? What do you look at to determine, I mean, is it just whether a setup's working or not? And if it stops working, if you stop seeing it, you stop trading it? Or how do you judge the macro?
Well, first of all, I'm looking at the overall markets. Now, at times, obviously, penny stocks with the right catalyst and whatever it is, or even penny stocks in general will move independently of the overall markets. But for me, when the market is going, yeah, that's, you know, if the overall markets are green and we're looking good and everything's healthy, it gives me a little bit more conviction to the long side. So that's the first. The second is, what are the penny stocks doing? What have they been doing? Have we seen multi-day runners? Have we seen certain catalyst moving stocks? So yeah, it's kind of taking a step back and looking at what's been happening the last month, what's been happening the last 2 months, what happened last week, and just keep building upon that process to where I always have a good sense of how aggressive or not aggressive I should be.
Hi, this is Aaron, aka Double A Ron from New York City, and I like to go outside and find a stray dog, preferably an aggressive breed like a pit bull or a Rottweiler. Then I get real close, stare it down eye to eye until it starts to chase me. Then I run. That's right, I run while listening to Steven and Tim on the SteadyTrade podcast. You can register to win real actual prizes at their website, SteadyTrade.com. And if you really like what you hear, give the podcast a 5-star rating and write a glowing review on iTunes. I did, and this is how we say goodbye in New York City.